Stock Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the stock play of the day. Today's stock is DocuSign. The symbol is DOCU. Today we'll discuss, should we pass or should we play? Hello, my name is Brian Overby. I'm the senior options analyst at Ally Invest.
And I'm Lindsey Bell, Chief Investment Strategist at Ally Invest.
All right, Lindsey. Well, we got a lot of up markets today. We see that the Dow actually hit a new high. And I'm wondering, have you put your order in for your Dow 30,000 hat yet?
Well, Brian, I think as soon as we get off the camera today and finish this show, I should put my order in. We did see the Dow hit a new high today for the first time. So that's exciting news. I think it's adding to the momentum that we're seeing in the market today. This is a follow through, really, of what we saw last week on the back of the Pfizer vaccine news. But only today, we got great news from Moderna that their phase three trial of their vaccine had some very good results. It's almost 95% effective, which is an unusually high rate. We heard last week Pfizer's vaccine was 90% effective. So this is even better than that. Usually what you expect to see from these trials is an effective rate of at least 75%, I think is what the experts were looking for. But when you think about it, the flu is about 50 to 60% effective. So the flu vaccine at a much lower rate. And that came from the Moderna CEO this morning when he was speaking on TV. But anyway, so you look at a chart of the S&P 500 here. You got the green bar there over on the right-hand side showing what's happening today. If we close here, we close at a new all-time high for the S&P 500. Friday, we closed at an all-time high. So continuing that trend, momentum seems to be at the back of the market, as this is reaffirming for many investors that the reopening trade really is back on the table here. So you've got sectors this morning like the travel stocks, the airline stocks, the cruise lines, all doing well. Energy and financials have benefited from this reopening trade. So you're seeing the flip being scripted a little bit within the stock market, within the S&P 500. Breadth is expanding, which is a very good thing. Breadth means there's more companies reaching new highs, and that helps support upside in the market. Now, what we haven't seen is the tech sector. Really, they've been the laggards in the rally the last couple of days. So the tech sector this morning is in the green. Nasdaq is up, but it's lagging the Dow and the S&P 500 as it is more heavily weighted to the tech sector, which has gotten the rally from those March 23rd lows to where we're at today. Now we'll talk about a tech sector name as we get further into the show. DocuSign is going to be our stock focus of the day, but some of these tech names are taking a bit of a breather here while the market figures out what's to come from an economic and earnings perspective overall. With the news of the vaccine that is here and much better than expected. The Moderna news, they're saying they're going to have 500 million doses available or being manufactured by the end of the year. Next year, a billion. Oh, excuse me, I misstated those numbers. It's 20 million doses of vaccine ready to ship by the end of this year. Next year will be 500 million to a billion doses manufactured globally. So those are really good numbers. And by the way, there are other drug makers in the mix here, not just Pfizer and Moderna, which they're big guys, they have bigger distribution networks. But there are other companies that are manufacturing not just vaccines but treatments and that. So that is a good thing for the economic environment in general. And it means even if we do get a slowdown here in the near term in the coming months with increased cases, and increased hospitalizations, potentials for certain states that are starting to restrict some activities. Even if we get a little bit of a pullback in economic activity at the end of this year, I think a lot of people, a lot of economists and investors in general are going to expect the environment to improve into next year. And it also means that those 2021 earnings estimates that we always talk about, Brian, are probably going to remain pretty stable, if not improve into the next year, because I don't think there was much vaccine good news baked into those numbers. I will, close out the intro here about the market activity by saying we are going to get the tail end of earnings season this week. We're finally going to hear from those retailers, Walmart, Target, among the list. And so we'll hear from them as the week progresses. We're going to get retail sales on Tuesday as well. The consumer has been really resilient. So I think paying attention to all those numbers this week is going to be very important. We'll get some housing data later in the week, permits and starts on Thursday, or Wednesday, existing home sales on Thursday. So that's something to look out for. And then also, I just wanted to point out that overseas, there was some good news overnight as well. There was a trade pact agreed to among 15 different nations over in the East. So China, Japan, Australia, New Zealand, among those 15 countries agreeing to free trade. So that was a positive for that region. And then industrial production numbers that came out of China were strong. Last Monday, we talked about some other economic data that came out of China, the export data that was also very good. So the recovery in China is occurring, and it's occurring at a pretty good clip. And hopefully that bodes well once we get past this next phase of coronavirus cases in Europe and here in the US. So there are good things to look forward to, I think. But Brian, despite that, when we look at the VIX, it's down a little bit today, at least last I looked, but still remains pretty elevated here. What is it telling us? What are you seeing in the VIX?
All right, so I have my watch list for the VIX up, and we do see the SPX is up 37. We see the NASDAQ actually broke 12,000, and we see the VIX just come down a little bit. As a matter of fact, I'd say that the VIX right now is flat, down 4 cents on the day. But the biggest thing is that it did break below the 25 level. So that's good news overall. VIX trading at 2308 right now. And we do see, if we go out in time, we look at the December, the January of next year, the Februaries, we see that we're looking at a 25% implied volatility. Once again, that 25% level has been very stubborn. And if you look over on the right-hand side on my chart, I'm going to highlight that we haven't gone below 20, I'm with my crosshairs here, since we had the downturn in the market because of the pandemic announcement. So it's just interesting to see that we have not breached the 20 level. A lot of people prior to this would have said that 20% implied volatility in the VIX is a high level. So there's still a lot of nervousness overall in the marketplace, even though we're looking at that Dow 30,000 level, setting new highs in the market. The VIX just stubbornly is staying above 20, even though the marketplace isn't as volatile as it once was back when we were making the drive down in March and the recovery back up. So the VIX overall it's good that it's came down below the 25 level, but we'd like to see it come down a little bit more just to show us that some of the nervousness is out of the marketplace. All right, so today we're going to talk about DocuSign. Here's the chart. Lindsey, what are you seeing with DocuSign going into earnings at the beginning of December?
Yeah, December 3rd, these guys are reporting earnings. Before I get into the stock, though, just a reminder to everybody that we will take your live questions at the end of the show. So be sure to write them in the chat box on the right-hand side of the YouTube channel. I see some of you guys already chatting. Love that. So keep it up. And we'll talk to you at the end of the show. But back to DocuSign, the chart. We got it up here for you. If you look at this chart, it's, you're kind of looking at it thinking, oh, this stock hasn't done much. DocuSign, as we know, was a work from home winner, a stay at home winner, as things had to become much more tech oriented, and all of us had to become more tech savvy. It was hard to sign documents without being able to scan them or fax them. to your counterpart. So that's where DocuSign came in. And what you don't see on this chart is off to the left-hand side, which is this stock is up 178% on a year-to-date basis, which is an excellent run. The PE ratio is, pretty expansive as well. Earnings are expected to grow, but on a normalized basis, I should say. But they've been slower to catch up to the stock. I will say though, the stock is down 14% in the last month. So in the last 4 weeks or so, we've seen the stock come in quite a bit, and that is on the back of vaccine hopes, vaccine news that I just talked us through. And as investors rotate out of the work from home trade to the reopening trade, so these guys have gotten beaten down. But what I think is really interesting about this stock is this bold red line that we have on the chart here, at about, what is that, $180, Brian?
186, Lindsey, 186.
Okay, perfect. 186. It seems like it is a solid form of resistance. Look how many times this stock has touched that level and bounced back up. So we've got a big eye on that. We've also are watching the moving averages here. So you've got the red and blue lines that are trailing. That's the 50-day and 100-day moving average. The stock is currently trading below those. It's been trading below the 50-day. I think since the end of November. It's also below the 100-day. So there's kind of feel like they might be levels of resistance. And I think it's really just, Brian and I were talking about it before the show. I think it's investors really waiting to get what is happening with earnings. What are we going to get on December 3rd from the company? Because you've got a lot of this market chatter that, when people return to the office, are the winners from the work from home trade gonna start to fall off of a cliff? And I think what this support line that you're seeing at 186 is telling us is that there is support for this type of stock. And when I look at the fundamentals, especially of a DocuSign, yes, it's run far and it's run fast. It's been consolidating though over the last several months, and maybe it needs to consolidate a little bit more while our earnings and sales catch up to it. But the fact of the matter is that people aren't going back to the office anytime soon, at least through the end of the year. A lot of companies that use this type of product are talking about a phased approach when they do return. So not the full workforce returning. So, and you can't ignore the acceleration in use of technology that has occurred over the last 8 months during the depth of the pandemic. I don't think that is going to reverse course anytime soon, especially for something like e-signatures or digital signing. I think the fax machine, Brian, might for the first time ever finally be breathing its last sigh of breath. Some form of it has always sort of existed as these signatures need to happen. It's been scanning through printing machines more recently, but now with the advent of DocuSign, and there's other competitors out there, it's made doing things like this a lot easier. So I think that you have that in its favor. The market, by the way, I looked it up. Markets and Markets is a company that estimates how big the digital DocuSign or the digital e-sign market is, and they're expecting it to grow to $14.1 billion by 2026. That's up from what's estimated to be a $2.8 billion market this year, after obviously a big increase in the market. That's a compound annual growth rate of 31% between 2020 and 2025. Pretty impressive, and those numbers have moved up over the last year. And DocuSign, guess what, owns 70% of the e-signature market. If they're able to maintain that 70% ownership of the market, technically their sales should be growing at a 30% clip, right? Over the next 5 years as well. But they're also doing other things. They have things like DocuSign Agreement Cloud, where you can, companies can utilize that service to hire people. There's usually a lot of documentation in the hiring process. It could be used for sales contracts, selling, buying a home, et cetera, et cetera. There's a lot of different uses for it. So really, the signature is just the beginning for DocuSign. This feels like there's a lot of opportunity there. But again, to balance the conversation out, it's really all about the valuation is high, maybe is a little stretch, And also, you've got these levels of support and resistance that might not work in the favor of the stock, at least in the near term. But I'm more optimistic over the longer term. But again, waiting to see what those earnings are looking like. And today, this is like a trade that goes against the grain of the market, which is really rotating into those reopening stocks. So Brian and I were always trying to think of something interesting to talk about. So that's why we brought up DocuSign. But what are you thinking from a paper options trade, Brian? What's your gut telling you?
Well, I'd say our forecast here, and we've been kind of emphasizing this going into earnings. We're getting on the tail end of earnings. We looked at some strategies where we wanted the near-term option to decay. And because the market and the VIX just overall has a lot of volatility in it, you will see that the option contracts and it's also true in DocuSign, have a lot of vol, even in the expirations that don't contain their earnings, that expire before the announcement. So we're going to do something similar to that. And it's a lot based off of all these touches on this support line down below. So we're going to look at doing a short put spread. We're hoping that that stock is doing what we think it may be doing, and that it's just waiting for earnings. So it's really just kind of jostling back and forth here a little bit. And that means we want to sell and bring in some premium and get some time decay. How are we going to do that? The strategy is called the short put spread. We're highlighting that inside the options playbook. And as always, whenever we talk about strategies on the stock play of the day, they're only meant to be paper trades. They're not meant to be recommendations. But we're going to be able to go way out of the money relative to where the current stock is, sell, and we're going to bring in a smaller credit because we're going to go so far out. But we're focused on what we saw on the chart. So we're going to try to use that information to help us pick our strikes. So we're going to sell a put, an expensive one, and then we'll go further out of the money and buy a put that's less expensive. We're doing this in anticipation of earnings. After earnings, we might have a different outlook on DocuSign. Obviously, that's going to be some major news. But with that said, we're thinking that this might be an opportunity to get some time decay on these option contracts and take advantage of the fact that the options in general still have a lot of volatility premium in them. So let's run to the Ally Invest option chains. And we see here, here's the earnings date. It's after the close on the 3rd is the anticipated earnings. So we do not want to deal with that expiration. We have many different expirations to choose from. Went down a little bit. The December 4th expiration would contain that earnings. That at the money option contracts, the put and the call are trading around 75% implied volatility. But we're going to look at the November 27th expiration, the expiration that happens before the earnings announcement. And that's trading, the at the money option contracts are trading at about a 50% implied volatility. Okay, so plenty of juice still in there. Now, also, I just thought I'd mention, since it is earnings, based off of the option contracts, the at the money call and put, we're looking at about a 28 point plus or minus move after earnings. So nothing to sneeze at, which turns out to be about a 13% move. So if you were to do something going into earnings, obviously that's implying a lot of risk on that underlying stock. All right, so here's the trade for this week. We're in the November 27th expiration. We said 186 we wanted to get below, so that's what we're going to do. We're going to sell the 185 strike put. Still a lot of premium. We see it's trading at about 51% implied volatility, 99 cents by 121. Now, we still have a lot of risk as the marketplace as a whole has a lot of risk just because of the volatility that we're seeing. So we're going to go down and take this credit, and we'll go down to the 180 strike, and we'll buy that. That's trading at 62 by 68. If we scroll down, we see this. We'd enter this all as one trade, send it down to the trading floor. If we did a 1-by-1 spread, we're looking at about a 45-cent net credit to the account. That means that's the midpoint. Now, when we started, it was at 50. 50 is a little bit more exciting to me because we got a little bit more risk than I would like in that we're going 5 points wide. So I'd like to get this done for about 50 cents, but this is a live show and the markets move while we're talking, so there's not much we can do about it. So we're going to make it at 45, and that'll be the official paper trade for this week. So if I put it in the right rail here on the Ally Invest option chains, we're going to be buying to open the November 27th 180 strike put and selling to open the November 27th 185 strike put. We would try to work this at a mid-price net credit of 45 cents to the account. That means that that's our maximum that we can make. 45 cents less commission is the maximum we can make. We're 5 points wide on the spread. That's the difference between the strikes. So that's the maximum risk that we have on this position, which would be 5 points minus that 45 cents. That means that we have $4.55 worth of risk on the entire position, and obviously got to add in commissions overall. And if we scroll down and look at our profit and loss graph here, we see that this kind of highlights how far we're actually going out of the money. That's why we have a high probability of success based off of looking at where the actual delta is. It's saying that there's about a 12% chance. The delta is right around 12. I think it's 12 cents here. Let's look at, 12. So that's implying that there's a 12% chance that this underlying stock will finish 1 cent in the money by that expiration date. Now, that's always a theoretical number. So we are quite a bit out of the money. Stock's trading all the way up here, right around 2,000 or 205, and we're selling the 185. So this is the risk graph as of today, and this is the risk graph at expiration. Now, obviously, if I jump back to the chart real quick, like here, if the stock ever came down to this level, below and broke below this 186 level, we'd want to get out of this trade for sure by then. Or you can look at it and say, well, I'm going to try to manage my risk. I can only make 45 cents on this trade. So if I jump back to the profit and loss graph, if it goes down to 180, 195, 192.50, I would be down around $1 on this trade. And if that happens, well, then maybe I want to get out. So I can only make 50 or 45 cents. If I'm down $1, I'm going to get out of this trade overall. So that might be the way that you want to approach it. On this underlying with the shorter term expiration, I kind of look at the chart more so than trying to manage my risk by price, but it's all up to you on what you would like to do with that underlying trade. Now, on the upside, this is a trade that you could wait all the way to the expiration date. We only got 10 days remaining till that expiration. If I run up top here, we got 11 days remaining until that expiration. And you can just let this ride if you'd like and see if you can capture that whole 45 cents. But it's always pertinent that if you can close this for a dime or a nickel, just take the risk off the table. You got the maximum, you got most of the premium anyways, and it's better to take off the risk sooner than later. All right, Lindsey. Well, that's it for the paper trade for the week. A lot of questions popping up. What do we have? Where do you want to start, I guess, would be the question. We got a lot of them over here.
Yeah, you got a chatty group this morning, which is great. I really liked, Brian, how you went through at the end there, how there's different things to look for with managing the trade, which I know you'll go through in more detail on Friday in Stock Play of the Day Overtime. But getting to the questions, Drew's got a couple questions in here. Good morning to you too. I see your second message. Thank you for that. Can we expect a replay of last week where cyclicals jump on the Monday vaccine hype train, but eventually sold off with increasing COVID cases? Well, it's always too early to tell on a Monday what's the week's going to end up like on a Friday, right? But I mean, it's a possibility. What I do think, though, from a broader market perspective, is that this news is affirmation that we are, I called it earlier the reopening trade. I mean, we have been open. I think it's more of a recovery trade. And I think it just means that the economic environment is going to continue to recover. And so it's not going to just be the names that are most impacted by economic activity and the ones that have underperformed. Certainly those ones have the opportunity to outperform, and there's probably more upside as they revert at least back to the mean going forward. But in my mind, I still think some of the names that have done well throughout this bull market since the March lows can continue to do well, which is why we decided to take a look at something like a DocuSign today. but we're not in this for just a week. We do have some paper trades that last a couple weeks. My personal mantra is to be a longer term investor. So I tend to think like that. But it's a good question. I don't know if you have anything to add, Brian, there. We moving.
No, I think you covered it well.
Okay, perfect. Charles Willis says the news is buying stocks today. Yes, this is a risk on day for sure.
Mm-hmm.
Well, another question. I want to know what your overall sentiment is on the gig economy sector, such as Uber, Lyft, DoorDash, specifically with the IPO of DoorDash. We don't have a specific stance, I would say, on the sentiment and the gig economy. I think it's something that, after you go through, like we saw the financial crisis, this is another recession crisis that we've gone through, and you start to see individuals become much more entrepreneurial after those types of events. And so I think it's something that can continue to do well. But those are really great ideas for Brian and I think, right, Brian, for us to maybe consider in the weeks ahead. Maybe we could talk about different stocks in the gig economy and come up with some ideas there, right?
Yeah, I definitely think that. I mean, that's kind of where the trend is at. That's what people want to hear about, anyways, because everybody's kind of thinking about it. So, yeah, definitely, and specifically the stocks that were mentioned, Uber, Lyft, those were in the news today. What might be going into the new year, where they might find themselves? Yeah, I think we'll look into more of those stocks going forward here on Stock Play of the Day.
Exactly. We're always looking for ideas. So if you guys have them, send them our way. Wayne says, hello, Lindsey, Brian. What do you use to confirm the liquidity of the option if the option is strong enough? The bid-ask spread of the chain, the underlying volume, open interest. What do you use to confirm the liquidity of the option?
All right. Very good question. And there's no golden book of answers here. Ideally, what you care the most about is the width between the bid and the ask. And in our option strategy, I actually mentioned to Lindsey a little bit today that the bid-ask spreads were a little bit wide. Now, if I have a wider marketplace, I would be more apt to do an actual spread as opposed to buying options outright. When you do a spread, you can work the order a little bit better and try to fill somewhere near that midpoint. Now, that's okay on the way in, but your issue would be if you were in a hurry on the way out, maybe you can't work the trade as well. So that's where trading illiquid options or options that don't have a ton of liquidity might concern you a bit. Now, what would I like to see the most, and I'm going to highlight my option chain here, what I'd like to see is actually the open interest. Intraday volume is nice. That doesn't hurt anything. We're getting quite the 180 strike has traded 169 contracts. But ideally, the open interest number, you want this number as big as possible. That means that there are people that have open positions for, if we see 451 here on the 182.50 strike, that means that there are about 900 positions that are actually open, because you're going to have a buyer and you're going to have a seller overall. So that represents about 900 contracts when you see that open interest. So ideally, I'd like to see open interest high, but what it really comes down to, what is that width between the bid-ask spread?
Really good insights there, Brian. I don't think we have enough time because we only have 1 minute left, but MWL Graphers asks thoughts on NEO put over earnings. Maybe we can look at NEO in the weeks. I'm not exactly sure where they're reporting, when they're reporting earnings, but I know that it's a stock that is of interest for many of our Ally Invest customers. Right, Brian?
All right.
Yeah, that's going to do it though for our show. So sorry we couldn't get to that question. We'll try to get to it in the weeks ahead. Stay tuned. Check in on Friday, Brian, at noon. We'll cover this trade that we just went through, and he'll walk you through any adjustments or tweaks that he thinks might be necessary based on where the stock moves this week. So you don't want to miss that, especially given the short period of time that we have for this trade. So check in on Friday at noon, right here, same place, and Brian will meet you there. And then after that, we'll see you next Monday too. So with the next Stock Play of the Day episode, right, Brian?
Right. And so in order to get all the alerts, make sure you click subscribe and ring the bell, and we'll alert you when the next stock play of the day is. Thanks for coming, everyone.